You're watching Notepad and I'm your host Ibrahim Sani. Today we will have a chat with Manulife Asset Management. Jason Chong is joining us to discuss not just about their firm but also to have a look at the industry as well. Jason, thanks very much for taking the time to speak with us. The interesting developments over the year in Malaysia has indeed been remarkable. We've seen stronger than normal growth figures. We've seen the government introducing very, very lofty ideals and ideas through the Shared Prosperity Program. We've also seen the Finance Minister presenting an interesting budget 1 or 2 weeks ago. How do you encapsulate this leading towards the end of the year? How do you, summarize this into how you want to manage 2020 moving forward?
I think when the new government took over last year, they put back a lot of the government projects, and that caused the economy to slow down. But over the course of the last 18 months or so, I think they've revived some of these mega projects. And on the back of that, we think that the growth next year would be better, right? Of course, the big caveat is on exports, and with the global economy slowing down, exports will be affected, and hence, we need more domestic factors to keep the economy growing.
But as we've seen over the past few months, and as well as in the budget, the government is increasingly off the appetite to get Malaysian exporters out there in the market. We've seen statements coming across from various players saying that because of the trade war between the US and China, a lot of these two nations are now talking to other countries to get more goods and services out of. How do we read the uncertainty coming up from the trade war and the posturing of the government trying to make Malaysians to export their stuff more to China or wherever else?
I think it's I was in Penang just a couple of weeks ago, and I was talking to this person that works there, and he was saying, and in the electronic sector, so he was saying that a lot of the Western semiconductor companies are actually expanding their capacity. So we talk about Malaysia being a beneficiary of the trade war, and I think that's a very good example. Some of the electronic companies there are also doing very well, and again, it's on the back of what's happening with the trade war as well. So we have seen pockets of potential growth areas.
I just want to highlight again, the statistics is a bit interesting. The E&E still remains to be our biggest export out. Despite the fact that we keep on talking about palm oil and the haze and everything else, E&E is critical to this. But the perennial argument is industries like the E&E, we're still down there in the value chain. We're not really up there in terms of building AI chips and many others. Honhai, Foxconn, whatever, Huawei, who wants to use these kind of chips, we're not developing that. Do you think that now is the time, because of the, quarrel between US and China, perhaps it's time for E&E players, particularly Malaysia, to just boost their capacity and not just be on the lower end of the value chain, move up?
Yeah, I think you're right. I think that's generally the direction that the government wants to take in terms of, for Malaysian manufacturers to climb the value add curve, right? I think generally, if you look at Malaysian entrepreneurs, they've been a bit more cautious in their approach, So I think they need to take a bit more risk and grow more rapidly, especially now there's this opportunity with the trade war. But yes, I do agree with you that Malaysia needs to step up, especially on the electronic side, where we do have some advantage and we're already in that industry.
And based on your observation, as you were mentioning just now in Penang, there are some opportunities that can be ascertained because the numbers are there anyway, the demand.
Correct.
Let's talk a little bit about Manulife this year. How have you guys sorted out your portfolio, equity versus fixed income? Are you okay about the whole situation? Malaysian equity, as you know, somebody joked, right? The most vibrant equity market in the world, but yeah.
If you look at Malaysia as a whole, sad to say, our Malaysian market has not done very well. For us as an investment house and being part of a global asset management company, the advice to our customers is that one needs to diversify be it local, having both local and foreign investments, also having both equity and fixed income. Because in this day and age, every day you wake up, you don't know what some people will tweet, and that causes markets to be very volatile. So you need that diversification to weather the ups and downs. So I was when I just looked at our performance, if you look at our fixed income funds year to date, it's up 7%. This is even higher than some of our equity funds.
Of course, and with interest rates being cut, and there's one more expected rate cut towards the end of the year, it's just going to boost further, right? Your 7%. Yeah. So what does that mean? That means that investors have to take a cautious approach moving forward. They can't go a little bit more aggressive.
I think at this point in time, we would advocate what you call a barbell structure. So on one side, we would want to go for your income biased products. Why? Because you want that steady returns, right? On the other hand, you also want growth. So you look for growth opportunities, like say maybe semiconductor is a place to be for import substitution, or what's happening with the trade war. But so you want a balance of both type of strategies in this kind of market.
We'll take a short break. When we come back, we'll discuss more on REITs. I'm with Jason Chong of Manulife. Thanks for staying on with us. You're watching Notepad, and today I'm with Jason Chong, the CEO of Manulife Asset Management. Jason, just now you touched a little bit about diversification of investment, and you were talking about REITs being interesting for you. And of course, let me tell you my story about my experience on REITs. And I have a few investments in my portfolio, and I tried a few years ago. I just tried 1 year, one REIT. And it gave me a positive return. Not to say that it was like anything, but I figured it's okay. I don't quite understand how this can be beneficial for me in the long run. So I pulled it out, invested in something else. Was that a good strategy?
No, I think if you hung on to that investment in REITs, you would have done very well.
Yeah.
Why? Because if you look at the returns on REITs in general, they have been yielding us anywhere from 4 to 6%, depending on which particular REIT that you are investing in. But if you take our Asia Pacific REIT, for example, a REIT fund that we have, over the last 10 years, that fund has generated a 15% per annum return.
That's crazy. Over 10 years.
Over 10, and
on
this
average.
is not on average. And this is not like 1 year up, another year down.
I was about to ask you, what is the range like?
It's been pretty consistent.
So it's not like 40% and then 2%?
No.
So we're looking at a very balanced curve.
Correct. And the reason for that is that, REIT is, what you are doing is that you are investing in yielding properties, be it office buildings, shopping complexes, and so forth. So all these assets give you regular income. And the beauty about these assets is that you also get to enjoy capital gains in the medium to long term because property values go up. And the other advantage of REITs, as opposed to investing in properties yourself, is that with REITs, you don't have to have a lot of money to have a diversified portfolio of different types of asset classes. You got your retail, your shopping malls, your condos, whatever it is. But also, REITs do not pay corporate tax. The rule is, or the law is, if you distribute more than 90% of your profits as dividend to your shareholders, you don't pay corporate tax. So you get higher payout because they have to declare 90% or more of their earnings, and it's tax-free. You can't get that by investing in properties yourself.
You can't. Of course, you have to pay property gains tax and many others.
Yeah, precisely. So those are the advantages of REITs, and REITs have done well not only in Malaysia but throughout the world, mainly because with global interest rates coming down, everyone is looking for safety, for stability, for returns that are hopefully better than what you can get by putting money in the bank.
Does Manulife offer the possibility of your customers investing in REITs overseas?
Yes. So like right now, we have an Asia Pacific REIT. At the beginning of this year, we launched the first global Sharia REIT in the world.
Okay.
Right.
Has the returns come in yet?
Oh yeah. So we launched the fund in March this year.
Okay.
So March to date, the fund is up 7%.
No way.
Yeah.
This is Asia Pacific only?
No, this is a global one.
All right, so we're talking about two things here, Asia Pacific REIT and Sharia REIT.
Yeah. So
Sharia is global.
Yes, and the other conventional rate is Asia Pac. So if you look at the Asia Pac rate year to date, okay, that's a full year to date performance. That fund is up 17% on a year to date basis.
17%?
Yes.
That's crazy.
Yep.
Sorry, is this the first year in running? Or?
Oh no, this fund has been around for 10 years or more.
Okay.
Yeah.
This is interesting, right? So how do you populate that particular portfolio? Do you eyeball everything, or you go with what the market says? How do you make sure that you choose the right necessary risk REITs?
So again, it's about diversification in terms of countries, because you don't want to put all your eggs into one basket.
Yeah.
And also in different classes of REITs or properties to invest in. So right now, our fund managers are overweight or bullish on the office space in Singapore and Australia. And on the commercial side, right, we prefer necessity malls. So necessity malls are those that, okay, you know, if you are in Hong Kong or in Singapore, you don't have luxury, or like in Malaysia, we can go to the wet market to buy our groceries. There, everything is in malls, right? So necessity malls are those that have your supermarket chains in it, and come what may, whether the economy is doing good or bad, you still need to go to the mall and buy your necessities. So in good times and bad times, right, you know that these malls will do well.
Again, you're talking about, sorry, there's a theme coming from your speech right now. Income generating businesses would be critical.
Yes.
Okay. Is this, for instance, the Asia Pacific fund or the Asia Pacific REIT, does it include Japan as well?
In our particular fund, it does not include Japan.
And why is that?
Because yields in Japan are not as attractive as other parts of Asia.
Negative interest rate, right now?
Yeah, so the general interest rates there are a lot lower.
What about the Sharia fund? When you say global, it's too big for me to grasp. What kind of areas do you go to?
So the biggest portion is in the States.
Yeah.
Then we have Europe. We've got Europe, UK, Australia. So it's the major economies, and some portion in Asia as well.
How sensitive are your investors when it comes to Sharia compliancy for REITs?
Okay, so we are the Sharia REIT is basically catered more for our Asian or our ASEAN neighbors, Malaysia and Indonesia, because we share the same Sharia principles.
Okay.
But we've been getting interest even from the Middle East on this global Sharia REIT fund that we have.
Okay.
Right.
But there's always the differential in standards of Sharia understanding or Sharia approval between Middle East and us.
Yes, correct. So that is the challenge, and making sure that we comply. So we are not saying that we are going to sell it to the Middle East, but we are exploring that because there are requests.
Yeah.
So we are looking into that area as well.
Does this mean that your Sharia compliance is being overlooked by the Sharia board of Bank Negara as well? Or?
Oh yes. So because our product was meant for the Malaysian market.
Yeah.
So it complies.
Retail customers?
Yes, for retail customers.
Okay.
So it definitely complies with our local Sharia laws.
Okay.
Yeah.
That's crazy. And how do you expect this particular market to grow? Do you think that it will grow very bullishly, or it's just going to be very linear in terms of growth?
So the REIT market is actually very interesting, especially if you talk about if you look at the global Sharia REIT.
Yeah.
So if you look at the new economies today, what are the new economies? You talk about internet and e-commerce. But if you take
internet,
e-commerce. But if you take one step back, they talk about cloud storage.
Okay.
But you know that cloud storage is actually a physical server sitting in somewhere, right?
Right.
So in the US, that's one of the fastest growing REIT areas where there are a lot of warehouses for servers, right? Because you need to store your physical servers.
Yeah.
And I mean, things like that is also growing in Asia. So
of course, e-commerce as well. You need distribution hubs.
Correct.
Where you need literally a platform for you to deliver goods and services.
Precisely. So the growth areas is places to store your servers, warehouses to store your goods before you deliver to customers, telecommunication towers, network,
Yeah.
right? Especially with 5G around the corner. So these are all, apart from your brick and mortar, the normal malls and condominiums and hospitals and all that stuff.
Yeah.
So when we launched the global REIT,
Yeah.
you know, it gives us an eye into where are the future growth areas for the REIT industry in Asia.
Yeah.
So in the US, for example, there are specialty REITs that actually, it can be a prison.
Yeah.
You can have a REIT,
Yeah.
right, that manages a prison. You know, so it's something that when I first heard about it, it's like, wow, okay, you know. But it just opens up your mind as to where the opportunities are, and there's a lot of growth potential.
The one very interesting interview that I heard very recently was of Schwartzman, the CEO of Blackstone. And Blackstone, as you know, one of the biggest, if not the biggest investment managers out there. They are the world's biggest warehouse owners. It blew me away when we talk about that, right? And you know, one of the explanation that Schwartzman gave, or the CEO of Blackstone gave, was that it's all about the internet, and the internet is about warehouses.
Correct.
It's just bizarre that, you know, when you think about the future or modern way of doing things, it's actually the brick and mortar that matters the most.
Right.
So very interesting. We'll take a short break. When we come back, we'll conclude our conversation with Jason Chong of Manulife. Thanks for staying on with us. I'm with Jason Chong of Manulife. Let's talk about 2020. For the retail investor, when they want to measure or take stock into the kind of macro economic activities as well as the micro stuff that's happening right now, how do they navigate 2020 early on? Because I guess, you know, towards the end of the year, a lot of people have wrapped up their kind of investment ideas. But moving forward for next year, how do you think they should navigate?
I think that's a very challenging question because of all the uncertainties. I mean, a lot depends on the trade war, how that evolves. As I mentioned earlier, you know, because there's so much uncertainties, it's very hard to say that we have one strategy and we're going to, you know, and we make that decision now.
Yeah.
We have to be a bit more versatile and agile in the way of thinking here.
Yeah.
The idea is to basically be defensive, look for companies with clear cash flow, you know, that can survive the ups and the downs.
Yeah.
You know, income yielding assets like REITs that we just talked about, you know, for additional alpha, we look for specific opportunities. So I won't think I don't think that it's more of a top-down driven thing. It's more of a bottom-up, and where you can find value.
I just want to pick your brains. What do you think about robo-advisors at this point in time?
Okay, this is a very interesting topic. So I'm of the view that investment products are sold and not bought. What that means, okay, is that, you know, investment products are complicated, and you may be able to do your research, but there will still be questions, especially if you're not from the investment industry, what all the technical jargon is. So in my view, you still need someone there to explain to you what the investment is all about, like what we just talked about, right?
Yeah.
So I feel that robo-advisory or fintech will be more of a tool to assist investment professionals to basically educate customers,
But
rather than to
customers,
replace them.
the way it's marketed is that you cut the middleman, you cut the investment manager out, and the customers can just jump in on the bandwagon and invest straight up in robo-advisor. You don't have to know anything. Plonk the money there, everything's going to be figured out for you.
So that's very interesting. So if you look at the fintechs or the robo-advisors, do you know that a lot of them have either closed down or they've been bought up by traditional money managers?
Yeah, hence the question I ask you, because I can't make sense of this.
Yeah.
I mean, they are regulated by whatever market that they operate in. In Malaysia, we have one or two robo-advisors well regulated by Securities Commission.
Correct.
But what do you think about them? Do you think that, you know, maybe we still need human beings to talk us through things?
I think so. Okay, maybe I'm biased because I'm from an asset management company.
No, it's fine. We
Yeah.
just want to know more, right?
Yeah.
But the key selling point here is the fees that people need to pay. You know, when we talk about asset managers, okay, fine, we got to pay asset managers out there, but if the returns are like double digits, I guess I can live with 2, 3%, 5%, whatever, right? Then the net would be 7, 8%, whatever. But robo-advisors cut that, I'm still going to, get 7%. So that's the idea where we look at, how do we sort out these kind of investment strategies. A lot of people, my parents included, they don't want to go into robo-advisors, not because they just don't trust the whole system. They don't even trust their own email or whatever, right? But at some point, we're going to talk more about this, right?
Yeah, I think to be fair, okay, I have not done.
I don't want to put you in a position.
Yeah.
But I just want to pick your brains.
So, I mean, to be fair, I've not done my research in the terms of what kind of returns have robo-advisors generate versus active fund manager.
Yeah.
So I will reserve my comment on that, whether they are generate. Of course, definitely the fees are lower. But are they generating the returns that investors are looking for?
And of course, the final question that I want to ask you for this interview, it's been a very interesting conversation actually, is on investing overseas. Yes, we've touched a little bit about REITs and many others, but we've seen the posturing from PNB, Khazanah, as well as CPF, that they want to diversify their portfolio even further. Because of instructions from the previous administration, they have to invest more locally. Now it seems like they have a little bit more mandate to invest overseas. But that's institutional investors. But people watching this interview, do you think that it's about time for us to start looking aggressively, if not REITs, something else, but aggressively towards investing overseas?
Definitely. I think you need to diversify. I mean, that's the message that I'm sending out to all my friends. Why? Because, things are so volatile. You can't put all your eggs in one basket, in that, whether it's Malaysia or Singapore. You need that diversification. In terms of asset classes and geographical reach, at least you get a more balanced income.
The problem is that anytime we go outside, we're discounted 4.2 times. So, no, it's tough, right? I mean,
yes, it is.
Yes, I want to buy $1,000 of something. It's 4,200 for me, ringgit.
Correct.
But is this a hurdle that we have to push through no matter what?
Yes, you have to. So again, diversification not only means asset classes, but also currency. So you're right. So if you want to hedge against the ringgit, invest offshore.
Yeah.
Right? Then you get that return back.
Yeah, 4.2 times, if not more.
Yeah, correct.
Or could be less.
Yeah. It's all about diversification.
Yes. Okay, that was an interesting conversation. I was speaking with Jason Chong, the CEO of Manulife Asset Management. If you've missed any part of this interview, just head on to astroawani.com, look for Notepad there. You can also watch these kind of interviews on the Astro AWANI app. Just download wherever you get the application on your mobile phone. Thanks very much for watching. Until next time.